This week, nearly every asset class moved sharply higher: gold, silver, most equities, and Bitcoin. Welcome back, everyone. It's just a pleasure to be with you this weekend. We've got another big must-hear show. The biggest story? Well, it has to be the cryptocurrency turnaround. Bitcoin was decimated under $1,900, then blasted this week over $2,700 per token, retesting or near to retesting former highs. In this week's
Tales from the Cryptosphere
segment, the CEO of what we feel is the most promising ICO of the year, a blockchain-based hedge fund, returns to the show. Backed by popular demand, Daniel Mark Harrison joins me from his offices in Singapore. A little higher quality audio on this follow-up interview, but please keep in mind that is almost precisely halfway around the world. I think you'll find it as riveting as I did. His soliloquy. He shares an overview of the blockchain-based hedge fund, ready to go public in 21 days. Our guest answers many of the key questions, including the token structure of the ICO. Each one of these Coeval tokens on the Waves platform carries 10,000 MNY, so it acts like an option for the upcoming ICO. And here's the great thing. The Coeval token also carries the rights to the next 4 ICOs they have planned. I highly recommend their Slack group. We have links up all over the place for that. If you need it, just send a message to me. Please join their Slack group. They'll really outline just how to get involved in this. And if you'd like my video, I created a 6-minute, very low budget, but I think informative and super basic instructional tutorial for folks to get an idea of what's going on, how to participate, and what could be, in my humble opinion, the first Berkshire Hathaway of the crypto world. And, if I had any Bitcoin at all, a tenth of a Bitcoin, a quarter of a Bitcoin, any Bitcoin at all, or Ethereum, I would direct it right to the Waves platform and buy up some of this Coeval. The MNY 10,000 shares per token will be delivered directly into the wallet following the ICO. Incidentally, they pay out almost all their net profits in dividends, and guess what form the dividends are in? Bitcoin dividends directly sent to your wallet. The most remarkable opportunity I've seen, frankly, since gold and silver and equities. Of course, Peter Grandich, a longtime friend of the show and Wall Street legend, says U.S. equities are at a record zenith. He gained international recognition for calling those major tops in 87, 2000, 2008, and he's sticking his neck out. We could be close to another such big top. He's very long gold and has, he says, substantial skin in the game. We discuss an interesting comment from the CME group, and our guest says it's better to be a year early by taking your profits out of equities than a day too late for investors. We're still very excited to have Silvercorp, a mid-tier producer, as a new sponsor of the show. They're boosting their dividend 35%. And for full transparency, Peter Spina, our top gold analyst and head of the Gold Seek Network, has plans to purchase shares on a pullback. Remember, we'd like to have you sign up for the Alpha Stocks newsletter, where you can see the weekly portfolio of shares that we like and the latest on cryptocurrencies. That is probably going to be, I think, the biggest story for the next 2 to 3 years, at least, maybe a decade. Robert Ian wraps up the show with his latest big report. And we'd like to have you call into our toll-free hotline. That's 641-715-3900, followed by the extension number 514049. 641-715-3900, followed by 514049 for the mailbox number. Please just jot it down on a post-it pad or plug it into your phone. GoldSeek.com radio begins now with the market weather recap. Sunny skies stretched across the horizon over the precious metals sector on U.S. dollar weakness following comments from the ECB economic ministers. Gold picked up $18, finishing at $12.45 an ounce, while silver picked up 42 cents, ending at $16.34 an ounce. The precious metals XAU shares gained 3%, finishing at $83.66. Black gold treaded water, off just 77 cents, ending at $45.77 a barrel. Meanwhile, the top story sending capital into the precious metals, news from the Labor Department indicated robust employment numbers, with the U.S. weekly jobs number lower in June, while manufacturing numbers from Philadelphia were were somewhat sluggish. Investors viewed the mixed news as a somewhat Goldilocks scenario, not too warm, not too cold, just right. The current Fed funds futures indicate extremely low odds of a rate hike this year. Not until next June will the odds indicate the next bump higher in the Fed's overnight lending rate. On an even more dovish note, the U.S. Federal Reserve Chair Janet Yellen said in her congressional testimony last week that the global inflation slowdown could require adjustment to the Fed's policy. The news was solid for nearly all markets but the greenback. The precious metals vaulted over their 50-day moving average, a key technical indicator for the first time in about a month, and posted the best weekly gain in several weeks. In related news, strength in the euro was tough on the greenback in the wake of European Central Bank President Mario Draghi, who noted the central bank will discuss monetary policy tightening in just over a month. Although he offered few specifics on the rate hike, the ECB ministers did hold the interest rate policy in abeyance for the time being. But the euro jumped as investors looked beyond seemingly dovish remarks from the ECB. Interestingly, the Fed has been talking tough on the markets in a hawkish stance, but one look at the St. Louis Fed's data indicates there's actually a slight uptick in their balance sheet. Plus, the Bank of Japan also said its inflation was lower than expected, about 0.3%, noting that their dovish monetary policy could persist for quite some time. Precious metals, bottom line. Well, the plunge in the U.S. dollar was startling. The greenback has just simply sliced through every support, giving back what took a year to build up. It's approaching, frankly, freefall conditions here. Could this be the beginning of a test of the lows in the world's reserve currency that so many of our top guests in the gold crowd have been calling for now for years? Peter Schiff, John Williams, Jim Rogers, many others. Well, it's certainly walking like a duck. So we'll see. We'll monitor this closely. Simply put, the precious metals aficionados are sitting in the catbird seat for the time being. Moving on to the Wall Street report, mostly sunny skies persisted over the New York Stock Exchange. The Dow Jones found support at 21,580, off fractionally about 57 points. The S&P 500 picked up 13, ending at 2472, while the Nasdaq added 75, finishing at 6387. The Bitcoin ETF added 6%, 21 points, just shy of 400 a share, while the Komodo coin, ticker KMD, added about 50 cents, closing just shy of 130. And, of course, the MNY Capital, Monkey Capital, Coeval blasted higher about 4 or 5-fold from last week on the Waves platform. Congratulations to Daniel and all his fantastic team. Moving on, the S&P 500 and NASDAQ were the big gainers this week for the third week running, while the blue-chip Dow stocks paused on a dour outlook from General Electric, which cooled some buying in the sector. Top winners on Friday included Colgate-Palmolive, ticker CL, which added over 1.5%. Honeywell International, ticker HON, up over 1%, after the aerospace and defense leader topped its sales and profit estimates. Skechers USA, ticker SKX, picked up over 0.5%, and Visa over 1.5%, ticker V, after besting Wall Street estimates on its earnings. The biggest percentage gainer on the Dow. Bottom line on equities. Well, despite a nearly endless call from every pundit I can almost think of for the end of this amazing equities bull market, I simply don't see it. There's just nothing to indicate that's the case. I mean, the technical outlook remains solid. Our 7-indicator greed to fear index is reaching more frothy territory, but there's still room for bigger gains, especially amid sector rotation. The Dow looks like it found some support this week. Perhaps it breaks out or attempts to break out in the next week or two. 2 more record highs, catching up with the S&P and the NASDAQ. Either way, I just don't buy the end is nigh mantra here. Coming up after the break, more goldseek.com radio.
The blockchain revolution is transforming the business world, and one startup promises exceptional returns to investors. That's why GoldSeek Radio is excited to support a unique ICO cryptocurrency offering that may present the investment opportunity of a lifetime. Monkey Capital, a unique investment company in Singapore and Hong Kong, both blockchain-friendly nations, is a leading decentralized hedge fund that will generate profits from SpaceX contracts, digital assets, and hostile takeovers. Their strategy includes Elon Musk-style ventures like the $70 million supply contract contract for SpaceX through seed investment in elite aerospace. At the helm, CEO Daniel Mark Harrison has an established record of accomplishment as well as accolades from the Wall Street Journal, Forbes, and TheStreet.com. Business partner Loud Capital is projected to return investors in excess of 40% per year. Plus, investors receive 10% of all revenues annually, and half of all income earned from activities are paid out to token holders. The unique token structure and solid legal foundation virtually ensure a cycle of perpetual wealth creation. Be sure to jot down ticker symbol MNY for trading on the user-friendly Waves platform and COEVAL for pre-ICO options trading. Remember, your investment portfolio will thank you for a core position in Monkey Capital, symbol MNY.
GoldSeek employees may or may not own shares. Nothing contained herein should be construed as investment advice.
Tales from the Cryptosphere.
All right, in a Tales from the Cryptosphere segment here today, we've invited back Daniel M. Harrison, Chairman, CEO of Monkey Capital. This is a global investment company based in Singapore and Hong Kong, blockchain-friendly nations. Welcome back, Daniel Harrison.
Thanks so much, Chris.
Could we start with an overview of your interesting background and MNY Capital?
Basically, I run a private investment firm, DMH & Co., out in Singapore. And we got together with a blockchain and put together this company. And then we involved a venture capital fund in the U.S. and a public company in the United Kingdom, all of which were sort of fell into place over the period of about a year. These things tend to be better, I think, when they develop organically than when you try to artificially kickstart them. Then, obviously, at this point this year, about 4 months ago, I knew that there would be a point of convergence when this market, digital token market, really took off, because you could see that all the signs were there. And I knew that this was going to follow specifically the Ethereum boom. And then we were sort of very lucky to get the management team that we did together, particularly Pierre Chemist, just such an experienced, brilliant mind, one of the best minds on the blockchain, without a doubt. Seth Shapiro, 2-time Emmy Award winner, governor of the Emmys of the digital media faction. I mean, these individuals we put on the management lineup are just superb. What Monkey Capital is, essentially, is we call it a value Coeval, which is kind of like a joint venture partnership that is combined with a DAO, decentralized autonomous organization. It's a sort of a hybrid between those. A group of companies that is operating together in order to build an organization that has both blockchain and real and sort of equity market and traditional financial market presences. And we try and bridge those presences by using the different aspects of financing in very different ways. For instance, the substantial difference between what tokens are and securities are really comes out in this. For instance, a token is a token raise, or an ICO as you call it, is a one-time thing, right? You issue a whole bunch of tokens out, raise a bunch of money, and then you put that money to work. Well, one sort of drawback of that is you can't re-raise capital, and we came up with a mechanism, the multi-ICO. Parts counter that. On the other side, what we did was we have a public company, and a public company can keep issuing shares. Now, what happens is there is the private company in Singapore owns 50% of a limited partnership, along with the public company in the UK, which owns the other 50%. What this means is the UK public company is selling shares and using shares in order to buy companies and putting them in the LP. That is increasing the value of the LP, the earnings of the LP, and the take from the LP. Half of that goes to the token holders. So the token holders are suffering absolutely zero dilution, and they're getting the benefits of the success essentially created as a combination between the public company and the management of the value Coeval. And why would the token holders get a disproportionate level of success? Well, because they're taking a higher risk. A token is a very new financial instrument, still on the border of regulatory acceptance. It is still in much discussion around different parts of the world, particularly the United States. There are these differences that we've kind of brought to light by bridging these two worlds. for the first time. We are the first people to do it. To me, I went around asking a lot of people, a lot of very knowledgeable people, hey, what's a token? Just to see what they would say. And everyone seemed to dodge the question. So we thought about it and took a step back and looked at it. And it was only during the process when the ICO started getting going. You mentioned our Slack channel, social media presence, which is just so busy. I mean, that Slack channel is amazing. And it started out with me in there and about 5 others, coming on to 700 people now. So in that process, we've had some people, just phenomenally bright individuals who kind of jumped on the back of the project. You know, they weren't asking for payment or material gain. They bought into, we'll go into our digital currency that we have out in a minute, but they bought into that. And basically they wanted to improve the value of it. And it occurred to me, if a token is a blank canvas, it is just a blank canvas that you can ascribe any sort of value onto. A security is something that is fixed in terms of the asset, in terms of the value that it has. It's either measurable by asset value, which is a sort of price to book, or an income value, which is a price to earnings. A token is nothing of the sort. You can ascribe any kind of value onto it, be it asset value, book value, be it earnings value, or be it any other type of value, be it human resource value, which is, you know, a lot of these tokens, really what they have built into them is phenomenal HR value. You've got all these very, very bright individuals working on a project together, creating huge amounts of value on the back of a unit of digital exchange. I could sort of see this unfold in real time. The way that I mentioned we have a digital unit out. What happened there, that's another first. With our multi-ICO process, it's a really quite a deeply thought through process. It's not just like we're putting out a bunch of ICOs in order to raise more cash at all. What happens is there's an initial option style token. It's called the Coeval. And the Coeval, there's only 100,000 of them, and more than half of them are no longer in distribution. So about 35,000 are burned. They're sent to a burnt address on the Wave platform where they originate, and 16,000 are locked up in a locked account. So there's 49,000 of these in issue, and if you buy one of these, they will grant you 10,000 MNY, which is the unit of currency at our ICO. So about 49% of the entire ICO is going to be comprised of holders of Coeval. These basically have an option type quality to them in the sense that when you buy them, you have to take into account the price you're buying at and what you think that we will raise at the ICO, obviously, because if the ICO is massively oversubscribed, then it makes sense. If the ICO was only to raise $1, then 10,000 MNY would mean a lot. But what we also saw happening with the Coeval was it became a unit of value in which everyone put great amounts of work, effort, creativity, thought into. And this, in turn, started producing an extra sort of value level to the project. It was really a sort of self-perpetuating organic type of value that was going on because people were buying into this token. They were then sitting on the token and then adding value by helping out in the project. Now, as it is, we take the best people out and we pay them very well. If we see someone making a huge amount of effort, I'm a big believer in really reward them materially very well. This is the kind of value that really creates project longevity. But they weren't to know that. That's certainly not why they came into the room and started adding value. They did it because they bought into it. So I would argue that we got, much bigger bang for our buck as a result of doing this. Of course, the huge risk was we were going to put out this token right before the ICO, and the token would flop, and then nobody would participate in the ICO, and the opposite happened. I think from a technical point of view, from a financial point of view, from a purely human point of view, it's been a wonderful, incredible experience. We've kept it very focused around the token itself and the token world. This is what these things are essentially. By keeping it so focused on the specific crypto landscape, we were actually able to link it much more easily with real-world finance. And I think that's true. When you keep something very authentic, very genuine, it becomes much easier to merge with than artificial or forced. I think you see a lot of ICOs now that really just look like cheap marketing campaigns or, your latest penny stock, just rip-offs of what shares are. I mean, I don't completely disagree with those who say that tokens look very like shares, because in a lot of cases they do, because the person who is applying, well, they're not really applying any innovation, but the person who is working on the token distribution is trying to make them a share. We're not trying to do that at all. We're just going to try and put this token out there and say, look, this is what you make of it. There are a number of other more complex guiding principles with respect to the supply-demand distribution ratios that we fix into the token family, as we call it. Because there's the embryo token we have out at the moment, then the parent token that comes next, that's the main token of the ICO, and then there's the child tokens, which are basically tokens that represent a portion of different aspects of the portfolio that the main token derives value off. Whereas MNY feeds off the main portfolio. Where does that portfolio get its gains from? It gets it from all these other smaller sub-portfolios which all have their own individual tokens attached to them. And there are various benefits to earlier token holders, obviously, because they will be able to participate in distributions of highly discounted or free tokens later on in the game. That's the whole idea. So it's something we really kind of looked at and went, hey, what do we do if we're really trying to evolve value on the blockchain? Everybody is being focused so much so on evolving the technological superiority of the blockchain, and I think it's a fantastic thing that they've done that. And now it is time to evolve value.
Just to illustrate the profound opportunity that MNY Capital, when we first put this out there, the first recording here, you could purchase a Coeval for approximately 0.001 to 0.002 bit.
Right, it was 0.002, 0.001.
Folks, a $5,000 investor would now be worth approximately $1 million. And there is at least that big of a leap ahead, even at the current price. And it's because people have yet to recognize this astounding opportunity.
Thanks. I mean, that's correct, and there is a lot more of that ahead. One of the principles of the blockchain, which I noticed several years ago, is that it's a combination of different value creation processes, value configurations. It is somewhat like a value chain, which would be a factory, for instance, in that it manufactures an object, albeit a virtual one. And that would be a Bitcoin, a token, or whatever. It is somewhat like a value shop, which is something like a consulting firm, an accounting firm, a hospital, something that applies knowledge in order to create value. And it is obviously a value network. A value network would be something like Skype, the most basic level, or like the internet at the most complex level, where value is created exponentially by every additional user who jumps on that network. If only one person uses Skype, you're not using it. When everyone uses it, then it becomes valuable, right? So it's a combination of all these three. And because of this, it is the only innovation in the blockchain that uses the same amount of knowledge, which is the knowledge it's using in order to create the token or the Bitcoin, or whatever unit of digital value it is, by solving the equations or whatever process it is. It's using the same amount of knowledge. It's making many, many, many more products at the same cost. And yet, every time the user jumps on the network, another user jumps on, it goes up in value again. So you've got this even cost. You've got this constant supply of knowledge generating value, and every time the user jumps on that network, it exponentially increases in value. So that's why you're seeing the big, big, big leaps, because its value is hardwired to do that, basically, virtually hardwired. I noticed this, and I had tremendous confidence. I knew exactly what was going to happen if we did this, that it was going to jump, because it can only jump more the more users jump on that network. Now, and the more widely we distribute it. One of the funny things is, you're quite right, it started at 0.001 Bitcoin in price. And then it quickly jumped up to, I think it was about 0.05 or 0.08, something like that. Then I started to get worried. I was saying, crikey, this is going to move very, very quickly. So we cooled the market off substantially when it reached about 0.1314. We told everyone we were going to do this. And we essentially just sold down very deep among those. A lot of people had sort of small orders on the buy side, hoping to get lucky with some cheap little bids, and we hit them all. And then we bought back. So we lost money. We deliberately went and lost money a number of times by hitting all those buy orders, very tiny little buy orders, buying back with that cash at more expensive prices. And we did that to get more people involved and to give those who were already involved a little bit of an early win. That expanded the number of people we had who were participating. I think someone was saying earlier today in the Slack, it's 190 wallets. Well, there was 40, after that sort of rise. Because I didn't want the same 40 buying and selling to each other. That's when you got a catastrophe. Without any warning, to expand the size of the network, and the thing kept rising. I think it touched 0.14 again today, 0.14 Bitcoin. It has touched 0.18. It will absolutely, without a shadow of a doubt, touch 4 Bitcoin probably by about September or end of August. It will absolutely. This is the Berkshire Hathaway of the token market. It will be $150,000 to $200,000 per token.
I just want for folks to really wrap their minds around this, because you see, for many in our audience, the mean age here, the mode, is probably 55 years old. I can tell you, I want everyone, whether they're an octogenarian or a teenager, to fully comprehend what Mr. Harrison is presenting to you today. You can purchase for around $200 one of his tokens, which bears the option, essentially, of 10,000 of his pre-ICO shares. And he's just told you, in no uncertain terms, the type of valuation. This is a once-in-a-lifetime opportunity.
That's correct. And, this is why I've said to everybody, don't buy a lot, just buy a little bit, and they'll go up a lot. I mean, I've had some people emailing me saying, you made me more money in the last 2 weeks than, I ever thought I was going to make in the next 10 years. And that's one of the goals of this project, right? It's because I recognize what the token market is. You have a situation in society right now, we're all familiar with it, every part of the world actually, where people are increasingly more educated. Let's say people between, particularly, you just talked about a generational segment, and I think this is a key part of this, right? You've got a lot of people who are between 20 and 35. I'm 37. Just within that group, just about to recognize it. A lot of people between 20 and 35, they are much more educated by and large in terms of the preponderance of them who are educated than historically generations have been. They have very sophisticated, intelligent technology at their disposal. And yet wages are not rising very fast. Costs are rising extremely fast. Whilst there is a sort of open-ended opportunity out there, there isn't the kind of culture which fosters necessarily rewarding that opportunity in the same way. By that I mean you don't go and work for a company today which takes care of you and sees you cradle to grave, and by the end of the 40 years of employment you are extremely well off and you have a neat social network and your whole life revolves around the company. My dad was in investment banking, Standard Chartered, Morgan Stanley, Deutsche Bank, all these institutions that he worked for at the beginning were much more like that back in the 1980s, right? And now today it's much more dog eat dog and much more market value defined. So there has been this change in cultures of organizations in ways in which people are hired and rewarded. By and large become a lot more short term and a lot less long term. So what these individuals are doing is trying to create value in a space, and they need to create value very, very quickly because the costs are rising relatively high, instability is much higher, and this is a response to that economic effect. That's all it is. I mean, when you see a new asset class in financial markets, there's usually a good reason for it. And the reason is usually sociological in nature. It's not that somebody went and devised a specific financial instrument in order to make money. That comes later. It's just like subprime housing derivatives. First of all, you had subprime housing, and that's because people who had less large incomes, had smaller incomes, they wanted to get places to live. And then people go and build derivative products on the back of them. So when you see people innovating in a financial space, in a value context, it's usually because they're trying to answer a social need. And that's what happened here. So you had all these people kind of jumping on the back of it, and you will continue to have that. We have got such a strong base grassroots community now that is so engaged in the process of they are in there many, many hours a day, and they are working, on producing, or they're working on stringing the company together. Now, what does our company do? Okay, so people buy our tokens, and then we will take and one of the unique things about Monkey Capital that is so unique is the people it reaches. Venture capitalists are particularly interested in us because of the target market. We are reaching a consumer that until now only consumer drinks or food, beverages, manufacturers have been able to reach. The guy in Indonesia or India or Thailand or wherever who has between, let's say, $3,000 and $20,000. That consumer, even the local banks haven't been able to reach. And we are able to reach out to that consumer. So that's an enormous great market. It's a multi-trillion-dollar market. And because we're able to reach them through online platforms with the word of mouth, through the community, et cetera, that becomes extremely valuable. There's a lot of brand trust and goodwill that comes into that naturally. Really in the much more old-fashioned sense that people used to build brands, quite frankly. I mean, when people built brands in the 60s or 70s, they built them based largely on goodwill, good faith, good practice. I don't think that's true anymore. I think it's just good PR. But, that's why goodwill as a form of value doesn't mean as much as it used to anymore. It used to mean growth. Now it just means sustainability. So we are sort of building on that traditional goodwill, which is community effect, and reaching those individuals who are, again, trying to solve the same problem. How on earth do they see returns that are adequate for the life they are leading? This problem of low employment and, not enough demand, high education, this isn't a US or a China problem. This is a global problem. It's a global problem. So, and you go to every part of the world, it's amazing. Whenever I go into New York City or Shanghai, the drive from the airport to the major city looks exactly the same. You're seeing the same society that's essentially coming together. The world is harmonizing in terms of its overall makeup. These individuals are, we are sort of directly connected to multitudinous personalities all over the world, and they buy the tokens, and then that capital is deployed to regulated asset managers or public companies. We do not manage money. We are essentially an aggregator in that way because we are able to hold the discussions with the big venture capital firms, the big hedge funds, the big public companies that would like to partner with us, and we are able to identify which ones are good and which ones are bad, and that's a fairly easy process when you're only dealing with the top 1 or 2 or 3%. And we deploy that capital out there. That capital has great return functions on it, high quality return functions on it, and reaches a market that's just not used to having that return function on it. This is a wonderful thing for global economy. It's a wonderful thing for the United States, and it will have exactly the same effect, I can assure you.
Here's a regular question I've received from so many folks who are just so anxious to get involved with your token. On the Waves platform, I've gotten at least 15 or 20 folks so far into the Waves platform. I'm sharing my Waves with them just to get them moving, get things going. They're having trouble in the US and in the UK, Canada, and elsewhere getting funds into Wave, the platform itself. I know that you're accepting pre-Ethereum right now. I've seen that on the Slack channel. Can you give us any other avenues to help these folks get involved?
The best thing you can do if you are interested in participating in the Monkey Capital ICO, wherever you may be, go to the website, monkey.capital, HTTP, monkey.capital, and go to the Slack and literally just turn up there and say, hi, I really want to get involved. I want to know more about this. I come from GoldSeek Radio. I'll tell them that you're coming in. I'll go back on after this and give a shout out and say I've noticed you guys jumping in. So your listeners, I will tell them, and they will give you fantastic service. You can be assured of it. The service is just first class. And these are the same people I'm talking about who just purchased the token, jumped on the project, starting to create value in it. They'll help you out in terms of You can ask them, how do I purchase an Coeval token, and how do I get involved? And they will tell you in a very non-salesy way either. This is how you do it, and if you need any help, just what you're doing. If you need any tokens in order to activate the system, they'll give them to you. They couldn't be more helpful. They couldn't be more sincere. They couldn't be less pushy. And I think this is why we've grown the community so strongly and so widely. I mean, just go in there anyway, even if you don't want to purchase a token, have a chat with them, see what it's all about. It's a fascinating place. You're talking about people from countries, from, more than 150 countries all in one place converging over how the economy is developing and different issues. I mean, sociologically, it's a great visit. And I would say that just even if you don't even intend to purchase a token, no one's going to try and sell you a token. No, because we don't. It's not that environment. It's a casual conversation and exchange of ideas, of core philosophies, of experiences, of points of view, and that really kind of culminates around the value of the token, quite frankly. I think if we just were trying to hard sell this token, it would have no value. But we didn't do that, even in the beginning. Just put it out there. And the token became the point of, kind of like when they used to have soda fountain sit-ins, right? And, as kind of protest votes on one thing or another. This is the same kind of thing. Brings value to the token by a form of its social exchange in the same way as the soda fountains became sort of culturally valuable spots and corners of the local town. Because of the people that were there, the dialogue that was being exchanged, and the progress that was being made.
It reminds me a bit of Lloyd's of London on Lombard Street. It started off as a place where folks were essentially drinking coffee. That was all the rage. What is this caffeine? What is this strange bean, from South America? It organically grew into this astounding industry.
I think that's right. Yeah, I mean, you can't not help but notice the environment, right? Chris, you've been in there. It's just such a fascinating environment, compelling. On a scale that even it surprised me, and that's why so many updates to the white paper, because so many of these realizations about how the value was being created came when I saw them creating it.
I went back page after page after page after page, and I thought, okay, well, this must have been at the beginning, around the time that we first had our conversation about 10 or so days ago. No, that was one day's commentary from your Slack members. This is a blog in and of itself.
It is, and it is a totally diverse exchange of ideas and points of view, and it feels current, doesn't it? It feels you feel like you're on the edge of something, on the verge of something that is really relevant.
Oh, yes. And it also feels like, look, many folks have been burned, as I think you alluded to aptly earlier. They're pensive when it comes to this idea of tokens. And by allowing this sort of, as you say, organic creation of capital, this capital market. And what I think is the best about your ICO is the platform you've chosen. I had never even heard of a wave or waves before this. The BitShares you have to download, and it's clunky. It's very user-friendly.
It is so user-friendly, and, it was the Pierre Chemist who is a brilliant innovator. I referred to him before on the blockchain, long-time innovator. We were so lucky to grab him, honestly. It's kind of like grabbing one of the best minds on the blockchain, one of the first guys there. He runs Peer Assets, which is a Peercoin protocol. Peercoin is the third cryptocurrency, if you like. It's the first differential currency of its own kind. He heads up that community. So very, very prominent figure. He was the one who said the Waves platform. He was the one who said, look, keep it simple. Use the Waves platform. Use something robust. Use something safe. Use something easy.
So here's a question from multiple folks, and they want to know, Daniel, what happens when my Coeval coin is now sans 10,000 MNY tokens? Where is the value?
So you have the Coeval, and you have that in your wallet, and then at the end of the ICO, we will distribute per Coeval that you own 10,000 MNY. Here's where it gets interesting. We have Let's say you got 100,000 MNY, 1 million MNY, okay? It's sitting in your wallet. And you still hold on to your Coeval. Coeval is the currency we use. So when the Monkey Capital Singapore company receives dividends from DLP, let's say it gets $2.5 million of dividends, we will convert that $2.5 million of dividends into Bitcoin. And then we will use that Bitcoin to go up and buy up off the market the Coeval, distribute the Coeval out to the MNY holders. So what we do is, and we've actually got, because we've got a number of segregated portfolios, we've got something called favoritism. It all sort of revolves around the family, right? Parent-child tokens and then favoritism, where what happens is the children pay in different amounts to the parent token. So all the different portfolios can pay in to the various percentages. And you can all adjust those percentages in the same way. I won't go into it now because it's in the white paper. It's complex and a bit too long for the show. But do come and read the white paper, and there's a yellow paper on it as well. And basically, we've created a sort of interest rate mechanism for the token market by doing it. Because what you can do is you can adjust the dividend ratios of different portfolios. Let's say you've got one portfolio doing 80 million, and you've got another portfolio doing 2 million. Well, if I make the dividend ratio higher on the 2 million, that's going to reduce or weaken or soften the price of Coeval because there's not as much Coeval that's going to be bought up in the market at that point by us in order to pay the dividend. So we have a sort of interest rate mechanism there which allows us to have much more steering over the project, allow it not to get too overexcited, overheated, and keep it safer. That's the idea. These innovations, they're first of a kind. I'm not going to tell you that it's safe. I'm not going to tell you that, this is a place to put a large amount of money. Don't do that. Just put a little bit of money if you want to play the innovation game and see it unfold. There is a chance we'll get it wrong because it's an innovation. I think we've got the brightest minds, so I don't think we will. I think we will get it wrong sometimes, and I think we'll put it right. But I think long-term, the project will be an astounding success because we've got fantastic minds on it. We're doing groundbreaking work. We're really trying to engage a community at the most grassroots level and just experiment with these huge value opportunities that are out there that everybody is just leaving lying around. I think we get it because we're the right minds, we're the right combination of people, we're the right sort of diversification of society all together combined that is kind of innovating at this incredibly rapid, exciting level. This is the future. This is the future of value and finance. If you think people are going to put up with 8% a year, 5% a year, forget about it. It doesn't work. You can't live on that. It doesn't work anymore. You need 50%. You need 150% a year. That's what you need in terms of a capital gain return. That's why people are making it, because you need it. It's not a luxury anymore. Most people, when they leave university or school, can't even rent a place, let alone buy one. That didn't used to be the case 30 years ago. It is now. So you need much higher return functions, and they are there. Because you need them, they are there. You have to understand we're still experimenting with that market and creating them, but they are there, and it's very exciting. Probably the most exciting thing that's going on in the world, and it's definitely the most exciting thing that's happened in the history of finance.
One thing, have you thought about the Sharia interest here? There are a lot of folks who simply cannot be involved in the U.S. stock market and interest-bearing bonds, things of that nature. You're outside the U.S. Your operations are outside the U.S. Yeah, there's an Islamic market here that would appreciate your dividend concept.
You know what? Before you just said that, I haven't thought about it, but for the Sharia law, yes, it is like in fact, the sukuk, which is the Sharia law bond, actually is probably the most similar financial instrument in the world to the type of instrument that is being created in the token market. When you look at tokens, most people, when they put out tokens, sort of put out these tokens and then buy them back at some kind of price in the future. That's exactly the way a standard sukuk works, essentially, because it works on a non-interest basis. So, yeah, that's a very interesting point, and I think the Sharia law investors would find this a very this is a very global, this is a universal form of finance. No one cannot get involved. You can get involved for as little as you want. You can get involved at as much a higher level as you want. You can get involved at an early stage, a mid stage, a late stage. This is what finance looks like. This is what it's going to look like in 20 years. It's going to look like Monkey Capital. We're designing it.
Daniel, I can honestly say this will be looked back upon as the most important interview that folks have heard in 12 years on this show, approximately 1,000 guests at least. This is probably going to make more people happy. I like the fact that you have qualified it, that nothing is guaranteed. This should be viewed as risk capital, but at this point, it's such a value. Give us a bullet list of key things that our listeners need to know about your upcoming ICO.
Okay, so the ICO starts on the 8th of the 8th and ends on the 9th of the 9th. And we just like the aesthetic and numerological symbolism of that, really. And before then, though, you go to the company's webpage, monkey.capital. We'll look it up, Monkey Capital ICO. And go to the company's webpage. You'll see a little tab saying white paper there. Download that. Then go have a read of that and go to the sign that says Slack. Get into the Slack, meet the community, chat with them. Like I say, drop by. Don't drop by to buy a token. Drop by to see it, to see what it's all about. That's really my message. I mean, actually, whether you buy a token or not really doesn't matter. Just come, at least come and take a look at what's going on here, because what is going on here is the evolution of a whole new world, the one that we're living in 20 years' time.
Even if you don't end up buying one of these must-have tokens, you'll become familiar with a platform that I'm convinced will provide unbelievable opportunities in the future if MNY Capital decides another venture, another opportunity. You'll be poised to participate in the next great big thing. Preface it with, we hope. But this looks great. Well, Daniel Mark Harrison, again, big hat tip. Many kudos that way. Anything else you want to leave with the listeners?
Yeah, they can go to your Goldseek Radio webpage and find all our stuff there as well, right? Put up some really pretty promotional stuff for us. And Chris, thank you so much for, engaging with this. I mean, it really, it's one thing to create a vision, to have that vision then responded to and appreciated. I think does just show and what it's all about, a tremendous.
Well, what about the book that you penned? 250-odd page book where you outlined your grand vision. You were essentially too busy to even bother publishing it.
A few years ago. Did you see I posted that in the Slack then? Yeah, because it's a book called The Minority Collective, and this actually goes into the whole value theory. This group is what you would call a minority collective, where the value utility concepts are reversed back to. That really comes down to the way that value and utility are traditionally used. Value is usually something that everybody is collectively drawn to, and utility is something that only a few people get. That is a sort of industrializing society. Now it's reversing, and you're seeing utility become what it's meant to be. It's meant to be for everybody, and value is supposed to be minority. It's supposed to be something that is, individually relevant and is individually ascribed. So this book comes from those notions, and that idea comes from two quotes about value and utility from Karl Marx and Ayn Rand, who basically were writing it. I realized when I looked at the dates, these two had such opposing philosophies because they were writing at a completely different time. One guy was writing at the beginning of the Industrial Revolution when it was a little bit like the technological revolution today. It was upending, disrupting societies and disrupting family life. And the other was writing at the end of the Industrial Revolution when all these innovations were producing amazing lifestyle changes. So their perceptions were completely different. So it comes from the idea behind that. It's a sort of political confluence. There's a lot of essays in there about digital currencies, about the history of digital currency, the history of Bitcoin. There's an essay in there about the Trans-Pacific Partnership. You can find this in Slack, that book, if you go up to the pinned items there. Trans-Pacific Partnership, which ultimately was disbanded, I think, massively admirably by the Trump administration. They couldn't have done just to see them take that horrible slave labor deal apart, going in, I thought was so commendable. It's hard to say. It was attacking that at a time when this was a very in vogue deal. So, very political, very financial, very controversial book, really. You don't have to agree with it, but have a read.
I mean, again, I underscore the most important interview, folks, you're going to hear or have heard on this show. All right, Daniel Mark Harrison, open invitation when your token crosses 1 Bitcoin.
Sure, let's talk then. That's super. Thanks so much, Chris.
The blockchain revolution is transforming the business world, and one startup promises exceptional returns to investors. That's why GoldSeek Radio is excited to support a unique ICO cryptocurrency offering that may present the investment opportunity of a lifetime. Monkey Capital, a unique investment company in Singapore and Hong Kong, both blockchain-friendly nations, is a leading decentralized hedge fund that will generate profits from SpaceX contracts, digital assets, and hostile takeovers. Their strategy includes Elon Musk-style ventures, like the $70 million supply contract for SpaceX, through seed investment in elite aerospace. At the helm, CEO Daniel Mark Harrison has an established record of accomplishment, as well as accolades from the Wall Street Journal, Forbes, and TheStreet.com. Business partner Loud Capital is projected to return investors in excess of 40% per year. Plus, investors receive 10% of all revenues annually, and half of all income earned from activities are paid out to token holders. The unique token structure and solid legal foundation virtually ensure a cycle of perpetual wealth creation. Be sure to jot down ticker symbol MNY for trading on the user-friendly Waves platform, and COEVAL for pre-ICO options trading. Remember, your investment portfolio will thank you for a core position in Monkey Capital, symbol MNY.
GoldSeek employees may or may not own shares. Nothing contained herein should be construed as investment advice.
Peter Grandich, best-selling author, head of Peter Grandich and Company, rejoins us today. Pleasure to have you back with us.
Doing well, Chris. Thank you for having me as always.
Peter, you gained international recognition for forecasting the major U.S. equities tops in 87. Of course, we had that dot bomb peak in 2000 that most of us remember. And then again in 2008, with the credit crisis from the housing sector. Recently, you've gotten a little bit more nervous about these markets. Tell us your thoughts, please.
Sure. So, like in 87 and 2000, 2008, I've become quite concerned, but I'm more concerned now because either the tools or the tricks of the trade that we had then, or they've been greatly limited since then. Some of them could be viewed as we've gone from the world's largest creditor nation to the largest debtor. And really any more substantial increases of trillions of dollars, which the last administration specialized in, would really call into question the ability to pay it back. And if we do get, for whatever reasons, a return to normal interest rates of what we used to be considered normal, there could even be questions about servicing that debt. Then you need a calculator to add up all our friendly nations that we had around the world. We need a calculator to add up the ones that don't like us. So political support around the world that we used to have in other crises won't be there, I don't think. I think political paralysis in Washington is evident, but it's also seeing that the middle ground is shrinking rapidly both on the state and local levels as well. The other factor is that, especially in the 87 and even the 2000s, we still mostly have people pulling the wagon. Yes, there were some people in the wagon who needed help, but the vast majority of Americans rolling up their sleeves and pulling the wagon. However, again, a great increase during the last administration. Many more people have gotten in the wagon and said, I'm either tired of pulling or I don't want to pull. I want the free ride in the wagon. And what's happened now is those of us that are left pulling the wagon are becoming very grudging about it and even questioning whether we should keep pulling. And then I think specifically, I think these things to address this particular market in general is, first of all, it's the most expensive market right now in the world. And so even if one didn't think there was going to be a substantial decline, which I think there will be, I think vis-a-vis owning alternatives than the U.S. market would be a lesser of two evils. But realistically, the last two things I'm going to mention, I think, are the key points to why I am so overly concerned and I would say, in a sense, worried that things are going to get really bad. And that is that fundamentals no longer drive the market. You may turn on the TV and see a talking head talk about fundamental reasons, but what's moving the market are computer algorithms. And as good as that's been for the market on the upside, those computer algorithms are not going to know the difference once it pays to do the same thing on the downside. And if and when that day comes, I think it will just accelerate a downside that may be even worse than we saw during the days of 87, 2000, 2008. But I think the ultimate negative that I have, and it was a place that I think at one time, at least the Wall Street people always counted on, and I don't think you can count on them at this point anymore, and that's the Federal Reserve. I really think it's become inept. I really think that there's a pair of flip-flops that hang over the chairman's door, because the inability to not only have a consensus, but stick with any consensus has all but gone on the Federal Reserve. And so I think the Federal Reserve is following the markets versus the markets following the Federal Reserve. And I think that's especially troublesome because I believe Yellen realizes that she's not going to get another term with Trump as president. She doesn't want to have what Greenspan and Bernanke had, and that was a major financial crisis having to handle it. She only has several more months to go before her term's over. And I think, if anything, she would go back into a softer approach, not a raising of interest rates, or even if things got bad, some sort of quantitative easing. And that's why I think the fear of rising interest rates is off the table, and that's why you're seeing the U.S. dollar get hit. So I can talk to midnight tonight and not cover all the factors that I think that Chris, that he wants to be concerned about. But like I said, I think this is the most troublesome I've been, and I've been at this for almost a third of a century.
You mentioned alternatives. You mentioned that the typical portfolio, today at least, probably isn't shielded against what could be coming. And, Fox Business News has interviewed the CEO of the CME Group. And for folks who don't know, that's a commodities exchange, said that he finds gold to be rigged, underpriced by thousands of dollars. Do you share his sentiments? And if not, why not?
Very long gold. I have no personal gain. I have no business gains from it. I don't work in the metals and mining industry now for several years. I don't represent anything that benefits from gold. I don't sell dry food or homes in the woods, but I do own a substantial amount of it. It's where the vast majority of my personal assets are. I don't know in terms of thousands of dollars, but I do know that when I look around the world at all the availability of different investment opportunities, I don't see anything that's more attractive than gold. I see things that are a lot less attractive. And so even if it was by default, I think gold has to be a significant part of the portfolio. I also think that something that happened, Chris, and I know you watch this much more than even I do, a few weeks ago was quite alarming. We had that silver meltdown or whatever in overnight trading. And there was an argument made by a gentleman on a major internet site that's popular for mining like yours and metals. And the gentleman made a very good point, and that was that the computer algorithms now are so fast and so volatile that the main reason he felt for the meltdown was that the computer algorithms got ahead of the ability for the exchange to handle proper bids. I think it was a telltale sign of a problem that's not really I'm concerned about in the metals market, but I'm concerned about in the stock market, even though in this particular case it happened in the overnight trading in silver. And I think it was probably something that we'll look back at, and when the computer algorithms really take over Wall Street to the downside, people will look back to that and a few other meltdowns that we had in the last year or so as warnings that no one really paid attention to.
No, it's well said. There are some awfully large fingers pointing towards the flash crash that I know you saw in the past couple of weeks, especially in the silver market. First, they hit the commodities. They also hit, even as you mentioned, the greenback. The NASDAQ was hit hard, and then the silver market followed. And one interesting comment from Lynn Fisher at Fisher Precious Metals in Deerfield Beach, Florida. This flash crash looked like it was governments trying to discourage investment in sound money. They noted that bullion banks appear to be cycling out of their huge short positions, and they use that a natural organic flash crash as an opportunity to cover some of those naked shorts, particularly risky position, but not when you've got the whole game rigged in your back pocket. I'd like your thoughts on the institutional situation here, as well as maybe even our governments and the sovereign trading in these markets and how it benefits them to manipulate the precious metals lower.
Sure. Back in my heydays of being a so-called expert, if that's what it was called, in the metals and mining industry, I used to have some great debates, although the gentleman would never actually physically debate me directly, even though major media groups offered that opportunity. He used to be a commentator on an internet site. He's been long gone because he was so wrong for a lot of times for so long. But the debate by him was there was never any manipulation, all this talk of the gold market being manipulated was, bogus and all. And I scoff at not only him, but anybody that says that now, when we can just Google it and you'll see that around the world and here in the United States, just about every market has had actual cases now and people found guilty and fines or what have you brought to bear of manipulating markets. And to think that we now know in Japan and China openly admit acting in their markets, to think that we don't have that in the United States and somehow at the Crimex, or what's commonly known as the Comex, it stops at their entrance and doesn't happen there. It's been part of, I think, what has suppressed gold from a much higher level, and that may be one of the reasons that the person that you spoke about earlier thinks it's worth a lot more, because it has been. And people say, well, if it is, why isn't everybody, on board? Well, listen, the natural enemy to gold is financial assets. That's just the way of life. And 98 or 99% of the people that make a living in the financial service world do it through financial assets. So you're never going to have the general financial service community endorsing or supporting gold in a major way, because in effect it would knocking or going against the things that they make their livelihood in. Well, the government operates in that world. It lives off and uses the mainstream financial service industry to help, look, that's where they float their debt through. Who buys that debt from them and all? So I think if you understand that and appreciate that and just accept that there is strong likelihood that governments and key people groups like that intervene in markets and suppress certain things, obviously gold has been and will continue to be a barometer of what is happening. And so if you can knock some degrees off the barometer and not show a fever, then you try to do it. So but I look at it logically and feel that it is a very supportive case to make an argument that there's manipulation in the gold and silver market.
1987, 2000, 2008, these markets just crushed people. And I know that there's been a time in your life when you had a fleet finger on the mouse button or on the phone to call your broker. We've all felt that sting where you just wanted to run outside and evacuate the contents of lunch today. So when there is someone who sort of sees the light, sounds the alarm, who isn't afraid to stick their neck out there and catch the flack they're going to catch from people who are long, and say, look, guys, this looks a little risky here. I think it's time to lighten up, take some chips off the table, go play some golf, go for a run, go for a hike, ride your bike, but don't trade these markets right now. You're starting to get those butterflies again right now, aren't you?
Yeah, and it's interesting you say that, because in my business now, which is basically built around estate planning and retirement planning and not trading markets and what have you, nevertheless, I've sounded the alarm in my blog, and the combination of being bearish during a time when my so-called competitors are roaring bullish and tying my faith into my work has shrunk the number of new clientele. Trust me, better if I was in the opposite camp. But it is what I feel. I feel that, I'm called to share it, whether it, wins friends or clientele or not. And like I said, this market right now, where we're at, compared to where the concerns at the tops of the others, I think is far more worrisome. And like I said, and I think the people need to understand that, we just don't have the tools and the tricks of the trade that were available in past ones to bring us away from the abyss. And therefore, that's what worries me so much, that when whatever causes the financial crisis to take hold, and who knows what that'll be or what time of day or week or month it'll be, we're just not going to have the ability to get out of it in the manner that we did before, which could at least suggest that whatever hits us, this time it's not going to rebound in a matter of weeks or months or even a couple of years. It may even take a generation or two before we can, return back to what we used to be, much more saner times.
You're right. It doesn't win you any points with the perma bulls. I'm a subscriber to your work, and I recall almost 2 years ago, you said, look, I yield to market theory. In other words, you sort of yielded to the efficient market theory. You said, I'm tired of trying to time these markets. I'm putting my family's humble portfolio into a diversified portfolio that includes precious metals, a strong, solid core of precious metals. And everybody who took your advice, they benefited. That took some guts to say, hey, you know what? The market is a little smarter than us. And so that's why I appreciate you saying, look, you know what? Something here doesn't smell right. Let's lighten up a little bit on U.S. equities and maybe take some cash or move it into another safe haven. Parting comments, Peter Grandich.
Very simple. And this is the philosophy that I take. It's only a sentence. People have to make their own choices and understand the mental and financial ramifications of the decisions. But I've said this in past crises, and I'll say this as this crisis, I believe, we're on the threshold of. And it's ever on the side of caution. The best advice I ever got from the only one of three people I ever knew that made money trading the market, and I wasn't one of them, said to me, Peter, it's better to be a year too early than a day too late. Once you're that day too late, you just can't bring yourself to make the change. And so be early, miss the last of whatever may be coming, and then be prepared that you'll have an opportunity that you'll be able to get on it. And that's what certainly I would do in the business of advising individuals. That would be certainly what I'd be telling people today.
Exactly. No, I think Livermore mirrored your mentor's comments there when he said the most expensive ticks in the market are the top tick and the bottom tick. And everybody, for the most part, loses their shirt because they just can't catch it. Peter Grandich, we'll look forward to further commentary later on in this year when I'll bet that U.S. equities will be cooling off a bit.
Thank you, Chris. Thank you for having me as always.
The blockchain revolution is transforming the business world, and one startup promises exceptional returns to investors. That's why GoldSeek Radio is excited to support a unique ICO cryptocurrency offering that may present the investment opportunity of a lifetime. Monkey Capital, a unique investment company in Singapore and Hong Kong, both blockchain-friendly nations, is a leading decentralized hedge fund that will generate profits from SpaceX contracts, digital assets, and hostile takeovers. Their strategy includes Elon Musk-style ventures, like the $70 million supply contract for SpaceX, through seed investment in elite aerospace. At the helm, CEO Daniel Mark Harrison has an established record of accomplishment, as well as accolades from the Wall Street Journal, Forbes, and TheStreet.com. Business partner Loud Capital is projected to return investors in excess of 40% per year. Plus, investors receive 10% of all revenues annually, and half of all income earned from activities are paid out to token holders. The unique token structure and solid legal foundation virtually ensure a cycle of perpetual wealth creation. Be sure to jot down ticker symbol MNY for trading on the user-friendly Waves platform, and COEVAL for pre-ICO options trading. Remember, your investment portfolio will thank you for a core position in Monkey Capital, symbol MNY.
GoldSeek employees may or may not own shares. Nothing contained herein should be construed as investment advice.
This is Robert Ian with goldseek.com radio. There's a whole lot of talk across all communication channels about protecting the integrity of democracy. By protecting the integrity of our elections. There's a lot of verbal smoke on this subject, but no easily explained underlying evidence to support the supposed interference into our elections. Rewind to the 2000 presidential election between George Bush Jr. and Al Gore. It was a close election that was eventually decided by the U.S. Supreme Court. There was a whole lot of ballyhoo at the time about the ineffectiveness of paper ballots. A problem, by the way, that did not exist before that election, and was attributed to the, quote, hanging Chad issue, which was supposedly the result of voters not knowing how to use simple punch cards, thereby blaming the voter and creating a bizarre rationale to begin introducing electronic voting machines, which, by the way, can be hacked. There are numerous videos and investigative reports on the web showing the relative simplicity of this process. Assume for a moment that of those voting districts that use electronic balloting that do not have paper backups, which is about 25%, and that somehow some portion of those were hacked, it would be not by a foreign entity, but in person, on an individual basis in each precinct, namely because voting machines are not connected to the Internet. The system is heavily decentralized. A lengthy October 19th, 2016 article on, you guessed it, CNN, proclaimed that no, the presidential election can't be hacked. It's a very thorough article that even mentions the specter of Russian interference, which was laid to rest ahead of the election. Remember, this article and many others like it appeared 3 weeks before the 2016 presidential election, when every major news outlet was absolutely certain Hillary Clinton would win the presidency. You'll recall it was Donald Trump suggesting at his rallies that the elections might be rigged against him, not by some foreign entity, but by his opponent and her surrogates. These numerous articles about the decentralization of the presidential election were designed to counter President Trump's assertions of possible rigging against him. In that article, Nicholas Weaver, a computer scientist and cybersecurity expert at the International Computer Institute at the University of California, Berkeley, said the following: "Nobody is going to be able to change the outcome of the presidential vote by hacking voting machines. The system is too distributed, too decentralized, too many implementations for any individual actor or group to make substantial change. Yes, they're horribly insecure. Yes, many of them give me nightmares," Mr. Weaver stated, "but the attackers are not going to be able to change the outcome of the presidential vote that way." How come the media isn't referring back to its previously quoted experts? Because a close and thoughtful examination of the pre-election narrative, indicating the presidential election can't be hacked, compared with the media's never-ending post-election narrative of innuendo and generalized allegations, suggests just one thing: both narratives cannot be true, especially in the absence of evidence, which means the media and its political surrogates were lying, or shall we say misrepresenting the truth before the election, or they are lying and misrepresenting the truth now after the election. Regardless of which is true, the media has misrepresented a situation for political gain, at the expense of integrity and confidence in our election system. A return to strictly paper ballots for presidential elections is likely the only solution that will restore some semblance of confidence to a system that seemed to be doing just fine prior to the 2000 presidential election and has been on a downward slope ever since. And until next time, this is Robert Ian with ConquerChange.com, reminding you to follow us on Twitter at ConquerChange. Thanks, Chris.
Okay, Robert, thanks for another excellent installment. Well, that wraps up this week's GoldSeek.com radio episode. For 2 new big guests, be sure to check out next week's show. Until we talk to you again, have a great week.
GoldSeek employees may or may not own shares. Nothing contained herein should be construed as investment advice.